In this video, traders, I want to explore the most common trading mistakes that new traders make. Stay tuned. Hey guys, a very warm welcome to you. Thank you for joining me. So, main things, guys. First one is trading too much size. This is huge. You know, as traders, we come in, we want to make money, right? You want to make money. That's why you're here. You want to make money. You enjoy trading, fine. You want to make some money. The thing is, trading too much size has a negative impact for new traders because they see, hey, if I trade £10 a point, that means that I'm making 20 points here, 50 points here, 30 points here, adding it all up, they're thinking all the thousands they're gonna make and how great it's gonna be. And that's fine, that's the positive side of using leverage. The negative side is, of course, you can still lose that. And so when you're going through the learning curve as a new trader, making mistakes, which you're gonna do, you're gonna make mistakes, you want the impact of the negative impact on your account balance to be as little as possible. So you need to trade smaller size. Many traders go and trade as much size as they can, leverage themselves up, and wonder why they get hit and they're out of the game before they've even had a chance to kind of understand the game. So trading too much size, big common thing. Second thing, guys, is trading too much, or over trading as we call it. You know, being very methodical about your process, how you pick your trades. Now, I'm not so concerned at the beginning how people select their trades, what strategy they use, what market they trade. It's the over trading that's the damage. You know, you're trading one thing, then another, then another, then another, another. And you know, this constant frequency of trading doesn't do your account any good. Now, of course, you have to pay a spread. I mean, spreads are super tight, guys. When you're talking about the spread on some of the major currency pairs, ridiculously tight. But you know, it does add up. If you're doing hundreds and hundreds of trades, it's going to add up. But not really that, because like I say, the spreads are so tight these days. What's more impactful is, you know, you're constantly moving from trade to trade. You're not letting one trade actually pay you for taking the risk. You might be grabbing a little few pips profit, and a few pips loss, and all you're doing is spinning your wheels. And over trading also breeds kind of frustration sometimes, and revenge trading, and all these kind of things that if you're new to trading, you probably think, what does that all mean? That's kind of the mindset we have to get in and think about the emotional side of trading as you start to get more size put on your trades. Third thing is trading too many markets. You know, many different markets, guys. You know, you've got ridiculous amount of markets there. But I think they will agree with me as well. You know, that the best way to get yourself traction and to get yourself longevity in the markets is to become you know, more focused on what you're trading. So just trading a couple of pairs, a couple of forex pairs, just trading a couple of commodities, just specializing in a few different indices. And that means that you get to know them, you get to understand them, especially as a new trader. Because if you're flicking from gold to crude to this, to that, the other, you can never become that focused. So it's a very common mistake I see is people trying to trade too many markets. It's hard, guys, it's super hard. You know, why do you think that the top performing traders, hedge fund managers, proprietary trading firms, you know, working with a bank, become specialists in the sector? You know, they're a specialist in that sector, they're a specialist in that market, they're a specialist in this. And we drill it down, and that's so that they can become very good at it. The fourth thing, guys, is moving stops. Common mistake I see traders make. They place the trade, they put a stop, which is great. You know, you should be putting a stop loss in, and there's the facilities to do that within any of the trading platforms. But it's all very well having the technology there, but if you're gonna move the stop, there's no point. Price starts to get to it, you're like, I don't want to feel the pain of the loss. I don't want to have to feel that. I don't want to lose money. So what I'll do is I'll move the stop because that won't make me lose money. And yes, okay, it never locks in the loss, but you're still on a mark-to-market basis down. So logically, if you can have that argument with yourself, it doesn't make any sense, but traders still do this. So don't move your stops. If in doubt, trade small, keep them wide, and then bring them in. Bringing them out again and widening them or deleting them is a big no-no. Fifth, not letting great trades run. So it's the opposite of kind of letting those stop, of kind of moving the stops or deleting the stops is, you know, when you're in a trade, when a trade is working for you, see how much you can get out of that trade. You've done the hard work. You've taken the risk on the deal. You've gone, right, I'm going to risk £200, £50, £5,000, whatever size you're trading at, it doesn't matter. You've decided to take that risk. You've decided to take the leap. So why cut it as soon as it shows promise? You get a couple of hours of movement, I'll grab it, I'll grab my money. You know, you're right, you've taken the risk, let the trade mature, have a sensible place to mitigate any pullbacks, to kind of take your profits and not let too much come back. At the same time, if it's working for you, let it run. You need some of these big runners to pay for the times when the market's chopping around doing nothing and the losers. You need those ones that are running on and on and on. We'll talk about risk reward ratio, which is something that we cover quite a lot. If you want to check out the channel, guys, risk reward ratio, I've done lots of videos to talk about that. I probably will investigate that a little bit further again in the future. Number 6, guys, being nervous of risk. This is an interesting one because I think new traders fall into 2 camps. One is super gun-ho and just swinging around and not realizing how much potential damage they can do to their account. The other is being nervous of risk. And why do I say this? This isn't necessarily position size or trading, because actually over trading and too much size is not being nervous of risk, but it's being nervous of the risk you've got on the trade. This ties up very nicely with letting the trades run and when just being stopped out. Because what you're doing is, you know, as the trade is going your way, let's say you're up £500, for example, on the trade, you're nervous about giving back. Now, the irony of trading is this, guys, is that you don't want to see that coming back to a £250 profit, but you'll happily risk £250 on a new trade. And it's exactly the same thing. You're risking £250, but that's already a trade that's working and has got potential to be a £1,000 trade, but you don't want to. You want to cap that or take the £500. You want to bank it. You want to feel great. So you're nervous of leaving the risk on. So be mindful about this and say, hey, I should consider risk as risk, whether it's a fresh trade that's taking the putting the risk on, or it's a trade that's running and I'm risking it pulling back. Don't be frightened of a trade pulling back. Of course, have some kind of trading stop loss in place, whether it's mental or however you decide to do it, but don't be frightened of price pulling back. Don't be frightened of giving back some gains at the potential opportunity of making much, much more. So don't be frightened of risk, but at the same time respect risk when you're taking your trade. All right, guys, these are the most common trading mistakes that I see new traders make.